Welcome to The Explainer. Today, we're diving into the Reserve Bank of India's latest financial stability report. And it tells a really fascinating story, an Indian economy that looks like a fortress of stability, while the rest of the world, well, it's facing a pretty serious storm. So let's start with the big picture. What's going on out there? Because the world outside India is facing some serious headwinds. The RBI report points out that while the global economy has seemed surprisingly tough on the surface, there are some major vulnerabilities brewing just underneath. For starters, you've got these ongoing geopolitical conflicts and trade frictions. Now, the report highlights how these things cast a long shadow. They create this persistent uncertainty that makes it incredibly difficult for businesses and for anyone really to plan for the future. And on top of that, you've got public debt at sky-high levels, especially in the big advanced economies. Governments are borrowing way more than they were before the pandemic, and that puts a huge strain on public finances and eventually drives up borrowing costs for everybody. And then you have the market itself. There's been this massive wave of optimism around artificial intelligence, right? And it's driven stock prices for AI companies to what the report calls stretched levels. And that word, stretched, introduces a whole new layer of risk. So what exactly does stretched valuations mean? Well, think of it like this. It's a huge disconnect from reality, where prices are just way, way higher than what the company is fundamentally worth. And the report warns that if that AI optimism suddenly evaporates, it could trigger a really sharp market correction, a kind of domino effect that could easily spill over into the whole financial system. Okay, so with all that global gloom and doom as the backdrop, the report turns a corner and paints a very, very different picture for India. It's a story of resilience, a fortress that seems to be weathering the storm incredibly well. And this slide right here, this just nails the core theme of the report. On one side, you have a fragile global system, and on the other, a robust and resilient Indian economy. The contrast is really stark, and that's the central story we're looking at. So you have to ask, what's behind this strength? Well, the report is pretty clear that this isn't just a fluke. It points to things like strong domestic demand, inflation that's under control, companies with healthy finances, and, smart government policies. The key takeaway here is that India's power is being generated from the inside out. And that domestic power, it translates into real, actual growth. I mean, a number like 8.2% GDP growth isn't just a statistic on a page. It's a powerful signal of an economy that's firing on its own cylinders, even while the global engine seems to be sputtering. Of course, a strong economy is nothing without a solid financial backbone. So the next logical question is, how are India's banks, the very core of the system, actually holding up? And the report doesn't mince words here. The answer is clear. The system is sound and healthy. But hey, we don't have to just take their word for it. Let's dig into the proof. You can really see that health right here in the numbers. These capital buffers, which are basically financial cushions for banks and lenders, are strong, way above the required minimums. Plus, you see that market volatility, which is a good measure of fear in the market, is low. These are all signs of confidence and stability. And this isn't just about how things look on a sunny day. The RBI has actually run stress tests, basically simulating severe economic shocks, and the system holds up. It means our financial institutions have been battle-tested, and they're prepared for a potential crisis. Okay, now we get to what I think is one of the most fascinating insights in this entire report. There's a fundamental power shift happening right inside the Indian stock market. And trust me, this is a huge deal. For years, for decades, the story was always that foreign investment was the main engine of the Indian market. But just look at this. In the past year, foreign investors were actually net sellers. They pulled out a whopping 1.6 lakh crore rupees. But here's the plot twist. Domestic investors, and we're talking about mutual funds, insurance companies, pension funds right here in India, they stepped in with overwhelming force. They invested a staggering 7.4 lakh crore, more than soaking up everything the foreign investors sold off. And here's why that matters so much. The Indian market is becoming less dependent on the whims of global investors. This shift is creating a powerful new anchor of stability, making our markets more resilient to global shocks than they've ever been before. So, what's the final takeaway from all this? Is it all clear skies and smooth sailing for India from here on out? Well, not exactly. At the end of the day, the report's message is one of cautious optimism.
The fortress is strong, absolutely, but that global storm outside is still raging. And the RBI makes it clear they are very aware of these external risks and are actively building what they call strong guardrails to protect the system.
And you really get that sense of commitment from this quote by the RBI governor himself. Their focus, their North Star, as he puts it, is stability. That's a promise of constant vigilance and proactive management.
And this image really captures that complexity, right? The modern financial system isn't some simple machine. It's this delicate, interconnected web. Navigating it safely, especially with all the global risks we've talked about, requires constant attention and really smart, forward-thinking policy.
Which leaves all of us with one big question to ponder. India has clearly built a formidable economic fortress, grounded in its own domestic strength. But the question remains, if that global storm really intensifies, will the walls of the fortress be high enough? Thank you for joining this explainer.